While Amazon has dominated online shopping in the US for years, there's another name for online shopping that's far more popular in China. Here to share more of what's behind JD.com's stellar earnings this quarter is Marketbeat analyst Jay Yu. Jay, it sounds like JD.com is a very popular name in parts of Asia and Europe, but for those of us who maybe don't know anything about this company, what does JD.com offer?
Well, they're pretty much the Amazon of China. So you can buy anything from houseware to computers, technology, video games, apparel. What separates them from other sites like a Alibaba or a Pinduoduo or a Temu is that these Chinese online sites, Chinese products in general, that have this reputation of being knockoffs, of being cheap quality, bait and switch, stuff like that. These are often the complaints people have with a site like a Temu. JD.com actively tries to change that with their authenticity guarantee. So basically, anything you buy there, they are backing 100% that it is not a counterfeit. Any merchants that do end up putting anything that's fake or counterfeit on the site gets banned. They get banned immediately and fined. So they keep a very tight lid as far as the quality is concerned.
And it sounds like that's not the only product they offer. JD.com has several different branches, right?
Absolutely. They call it the Amazon of China for many reasons. Just like Amazon, JD.com has a number of diversified businesses. They have online pharmacy. They have their JD Technology, which does cloud computing services, AI. So they're on the cutting edge when it comes to technology. Now, JD Logistics is major. These guys are the largest logistics company in China. Uh, they have over 1,600 warehouses, which together total more than 32 million square meters, not feet, square meters. And they are on top of automation. They are basically ahead of the curve. They had their first automated factory in 2018, where you would normally have 400 to 500 workers inside a 40,000 square meter facility. That's been replaced by robots, and you only need 5 people to run the operation, and they can handle up to 200,000 orders a day.
Wow, I'm sure that innovation is a large part of why this company is doing so well. Let's go through some of JD.com's earnings report. What's behind all the growth in this company?
Right. So their revenues only went up 1.2% in the last quarter, which almost sounds like they're not really growing that well. But their net income rose 69% year over year. So you're talking $40 billion in revenues, $2 billion in profits. And they actually hit a record. That is the most they've ever made in a quarter. And it's only going to continue.
So, what does that mean for the stock price? What are we seeing JD.com stock do right now?
Right. So JD.com is relatively low priced, especially compared to a Pinduoduo or an Alibaba. There's a very strong support on this one around 27. That's the daily 200 period moving average. The stock is starting to pull back a little bit, so that would be a good opportunity for investors to consider getting into the stock. Consensus price target and analyst targets are around $37 a share, so there's plenty of upside.
So, Jay, why is now a good time for investors to look at getting into JD.com?
They're continuing to grow. Their logistics department is China's largest logistics company. They've gotten it down to a science. They can deliver to 2,200 cities and provinces in China as fast as 9 minutes, to within an hour, to a day, to the next day delivery. They have over 350,000 in-house workers with the logistics portion of the company. They have a lot of big clients coming on board. They have a lot of clients in Europe coming on board. And like I said, they are on top of the cutting edge when it comes to technology and robotic automated warehouses.
Some great information. Thanks for the deep dive into this company, Jay. We'll continue to follow this company and much more at Marketbeat. Happy investing, everyone.